Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to show you how to trade stock options in order for you to receive consistent income. Now, if you're new to options trading, this video is going to be perfect for you because I'm going to demonstrate how you could use this to build a small accounts portfolio and how you could use this option strategy as a first time option strategy. Now, if this sounds like something you're interested in, I mean, making additional income to supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be highlighting how you could make consistent income in order to grow a small accounts portfolio, and I will show you how you could do this repetitively in order for you to have additional income coming into your portfolio and coming into your life. Now, for today's video, we're going to be highlighting a stock which is going to be IONQ. Now, IonQ is a quantum computing stock. I'm also going to show you how to do some basic due diligence if you're new to trading, and I could show you that anyone could go ahead and get this done. So you guys know how we do it. Let's go ahead and get down and dirty with options. And for that, we're going to go ahead and start off by going into the Robinhood Advanced feature right here. What that's going to do is that's going to open up this lovely chart right here. So firstly, we're going to go out to the 1Y right here, which representative of the 1 year time frame. Now, if today is your first day trading, I'm going to show you how anyone could do this. I'll make it as simple as I possibly can. So what you want to do is that you want to drag this white line right here. Now, before we get into the white line, let me just show you the importance of this blue line right here. Now, this blue line right here is the MA200, better known as the 200-day moving average. Now, if you're new to the channel, you will know that I like picking up my stocks or my options around the 200-day moving average. Now, the 200-day moving average on IONQ shows that this stock should be trading around the $25 mark. Now, always remember that. So, if you're new to options, this is what you could do. You simply go here, you get a straight line. You could put it at any point on the graph. What you're looking for is to see how many times that the stock price has hit that line. Now, this first line here is around the $30 mark. So, it has hit 1, 2, 3, 4, 5, 6, 7 times. So what that shows you is that this stock has a clear level of support, meaning that if the share price were to come down, most likely it's going to go down to the $30 mark. Now, you could also go ahead and make a line to the bottom once again. And then this one, you're going to count how many times that the share price actually touched this line. So let's go 1, 2, 3, 4, 5, 6, 7, 8, 9 times. So this is the $25 mark. So the first one we saw is what's known as your primary support. This other line right here is your secondary support. The primary support is at the $30 level. Your secondary support is at the $25 level. The whole purpose of your secondary support, it shows you that even if the stock were to break the first level of support, which is the $30, then chances are it's going to go to the $25 mark. Now, just by using the $30 as our price of emphasis, if we were to go up, we could see that the stock has made a high of around $48, but we're going to be conservative like we always are on this channel, and we're going to draw a line right here. So this new line here is a line of resistance, which means the share price has trouble going above this line. And every time it goes above the line, it quickly retracts back to that line. Now, this line shows you the $40 price. Now, the difference between your $30 price and your $40 price represents a $10 change. And your difference between your $30 price and your $25 price represents a $5 change. So that tells you that there's more upside than there is downside. So that's one way in order for you to read the chart if you're very new to options. Now, every great investor, every great trader knows that you always need secondary confirmation. So what we're going to go ahead and do, staying on the Robinhood charts, we're going to go ahead and check out our RSI or our relative strength index. So if we follow the line all the way out, you could see IONQ is trading around the $54 price range. Now, the 55 RSI, we're just going to round it up, is pretty decent. When calculating your RSI, we usually focus between the 70 mark and also the 30 mark. With any share price going towards the 70 mark, tells you that that stock is going into overbought territory, and vice versa. Any share price that's going closer to the $30 mark tells you that that share price is going to oversold territory. However, IONQ is smack right in the middle. So I really like that. That shows that the stock is really, really stable right there. Now, based on what I've just shown you here, what decision am I going to make in order to use this stock in order to make consistent income? So this is what we're going to do. Let's go ahead and go back to the actual stock, and to get down and dirty with options, we're going to go to trade IONQ options down to the bottom, and that's going to go ahead and open up our options chain. Now, our option chain is this part down here that gives us several information. Now, all this information it provides down here, what that does is that it helps us make a better, more informed decision when getting into our options contract. So based on the information I just showed you here, me trading IONQ right now, this is what I would do personally. I'm going to go to sell, I'm going to go to put, and I'm going to go to May 30th, which gives us 16 days. For the price of this stock, I'm only going to do bi-weeklies or monthlies. Bi-weeklies is choosing your expiration date around 2 weeks out, and the monthlies is choosing your expiration date around 30 days out. So we're going to do bi-weeklies for this video. Now that we have our sell, we have our put, and we have established that we're going to be doing bi-weeklies, now we're going to go ahead and choose our strike price. The current share price of IONQ is 33.54. So we're going to choose our strike price below that share price. Now, the price I'm going to go and select, I'm pretty sure you've guessed it by now, is going to be the $30 price. Now, if you're asking yourself why I'm going to go ahead and choose the $30 strike price, is because I just demonstrated to you based on the charts that this stock has a very difficult time breaking below the $30 mark. And even if it does break below, it always goes back up. So that's one reason why I made the decision to go with the $30 strike price. Now, with the $30 strike price, we have a chance of profitability here of around 75%, which is a very high chance of profitability. That tells me that there's a 75% chance that this trade works out in my favor. So, in addition to my $30 strike price, which I know the stock is going to stay right around, and my 75% chance of winning this trade, I'm going to be paid for this option strategy. The amount I'm going to be paid is going to be 0.83 or $83. Each option contract contains 100 shares. So you simply multiply your 0.83 cents by 100 shares, and that's going to net you $83. This option strategy is none other than the cash secured put. Now, the cash secured put is an options income generating option strategy. This option strategy allows you to make income whenever you do the trade. You get that income right away, and that's credited to your portfolio. That income is yours to keep no matter how the trade goes. And that is how you could use IONQ in order for you to make consistent income. Now, like I said, I did show you the secondary level of support. Now, when doing the cash secured put, always make sure to do the cash secured put on a stock you do not mind owning in your portfolio. So, come expiration date, if IONQ happen to fall below the $30 mark, let's say it gets to the $29 mark right here, then we're now going to be forced to buy 100 shares of IONQ at the price we chose, which is the $30 price per share. So we're going to have to pay $3,000. Now, this is what makes this option strategy perfect if you're trading with a small account, because the barrier to entry is only $3,000. So you're going to own 100 shares of IonQ at $29. Now you do not have to worry, because I clearly demonstrated that if the share price is going to go down, it's going to go down to about the most $25 unless something really drastic happens, and it always recover to the $30 price. So if I were to trade IonQ right now for consistent income, I would use a beginner option strategy, which is going to be the cash secured put. I will choose my strike price at the primary level of support in order for me to get a very high chance of profitability, in order for me to get paid every single time I do this option strategy. I do know, and I saw clear signs that if the stock does fall lower, chances are it's going to go to the $25 mark or above, so I know my risk before I get into this trade. Now, there's a second way that this option trade could go to expiration date. So if this share price right here happens to go down, but it stays above the $30 mark right here, then I did mention this before. This $83 that you're going to be receiving is going to be yours to keep. Remember, that is the whole point of doing an income option generating strategy. The money you receive, you always keep. And that's the additional income that can be added to your regular 9 to 5 in order to help you pay expenses or to reinvest into the stock market. Now, if the share price stays above the $30 price now, then you get your collateral released back to you. Your collateral is once again going to be the $30 strike price you chose multiplied by 100 shares, which is going to be $3,000. Now that you have your $3,000 back into your portfolio, plus you have your $83 of income, what are you going to do? Well, you're going to go ahead and do this option strategy again and again. And that's where the consistency part comes in. You're doing the exact same option strategy on the exact same stock in order for it to continuously keep generating income. Now, just an extra tip for you right here. Come expiration date, if the share price stays above the $30 strike price, but does not go all the way down to 30, let's say it goes to the 30.5, then when you're doing your next cash secured put, it would be highly advisable if you change your strike price. You no longer need to stay at a $30 price. You could probably now switch it to the $29 price. Just keep that in mind. So there you have it. If I were to trade options for income, I would probably be using IONQ. The reason why I would be using IONQ, which is a quantum computing stock, is because this stock is paying very lucrative premiums. Now, be very aware because this stock is in the quantum computing space is very volatile. That's why I showed you some basic due diligence that anyone could do, even if today is their first day trading options. Now, if you guys have any questions with IonQ or this particular option strategy, or if you guys need more information on how to use the graph, let me know in the comments below. Also, I do offer one-on-one coaching. So if you need help with growing your small account portfolio, or you just need some additional coaching to magnify your options portfolio, then I'm here to help. I will leave the link in the description below. Now, for those of you that made it to the end, you guys are the real option trader. If you guys want to increase your income, this is one thing you could do, one slight adjustment. So you're going to go now to do monthlies. You're going to go to June 13th, which gives you 30 days to expiration. We're going to be using the exact same strike price of the $30 price. And now you see, with the $30 price, we're going to get paid even more. We're going to get paid twice as much. So based on your own risk tolerance and your portfolio goals, you could decide whether you want to do bi-weeklies on this or whether you want to do monthlies. Remember, they all come with different risk tolerance. So make a decision based on your portfolio. There is no one that knows what's better for your portfolio than you. Now, thanks for watching. Go ahead, like the video, subscribe to the channel. But most importantly, if there's anyone out there you know struggling to grow a small accounts portfolio, well, that's our specialty on this channel. So feel free to go ahead and share this video with them. We're going to try to help as many as we can get away from the 9 to 5 and make consistent income. Now, until the next video, keep pushing your investments.